Macy's just reported Q4 earnings and the stock is up 7%, bucking the trend of peers like Kohl's and Dillard's who both dropped. Let me give you the full story, including the part they don't want you to see. The headlines look great. Revenue of $7.92 billion beat estimates. Adjusted EPS of $1.67 also beat, and operating margin expanded to 9.4%. But here's the first thing you need to know. A significant chunk of that profitability came from a $328 million pre-tax gain from a credit card litigation settlement. Strip that out, and adjusted net income actually fell 9.7% year-over-year. The quality of the beat isn't as clean as the headline suggests. That said, the comparable sales story is genuinely improving. Total comps grew 1.8% in Q4, the best in 11 quarters. And the store's Macy's is keeping open comped positive 0.6%, leading to a full-year comp growth of 1.5%. And then there's Bloomingdale's, with 9.9% comparable sales growth in Q4, its best holiday season ever. CEO Tony Spring credited a strong assortment and capturing shoppers from bankrupt rivals like Saks and Neiman Marcus. He also added something important about the consumer. Since the holidays, Macy's has not seen any change in spending, calling its middle and upper-end customer base resilient. Now here's the red flag no analyst skipped over. Accounts receivable surged 107% to $628 million, while full-year revenue declined. That's a classic warning sign for cash collection or revenue timing issues, and something to watch closely in Q1. Looking ahead to fiscal 2026, Macy's guided for sales above analyst estimates, but its EPS forecast of $1.90 to $2.10 missed consensus. Management framed it as an investment year, with comps guided roughly flat. The balance sheet looks solid, with a 5% dividend increase and strong free cash flow. At $18, the stock carries a 4% plus yield, with analysts seeing upside to $21.40. But with EPS guided to decline, that accounts receivable spike and new macro headwinds from rising fuel costs. This turnaround story is progressing, but far from finished. Subscribe. Q1 results will tell us if the consumer resilience holds up, or if macro pressures start to show. Like and subscribe for more.